Hi, welcome to this video today, which is all about a simple Forex stop loss and take profit strategy. Now, in terms of this strategy, it's not based upon individual trades. It's based upon having what I would call circuit breakers on your account. Okay. Now, in terms of this concept, okay, read years ago what I thought was a fantastic point made by Mark Douglas in his book, The Disciplined Trader. Mark Douglas, one of the great writers on Forex psychology. And he makes the point that most traders will tend to give back big profits. If you're a beginner to the markets and you haven't traded, you'll discover that is probably what you're inclined to do. Experienced traders will already know this. You've got a big profit in the markets, but you fail to lock it in, okay? Very often that turns into a losing situation. Also, when you're in a losing situation, try and get out of it. Basically, you dig yourself a deeper hole and fall further behind. I'm sure every trader has experienced both those scenarios. And you've got to keep in mind, with Forex trading, Mark Douglas makes this point really clearly. He laboured it a bit, but I think it's a really important point, that when you're trading Forex, there's no set end to the game. So, okay, if you're running a race, for example, the 100 metres, it comes to an end. You're doing various things in life, they come to an end, okay? Forex trading, you have actually got to call an end to your trades, okay? Now, the way you do this, obviously you do it on your individual trades. You manage your stop losses and you obviously have targets and so forth. But a simple, really effective way to smooth your equity curve, basically reduce your risk in my view and make more money, is to follow the tips that I'm going to give in a moment. I also want to talk about timing your trades, so giving them a certain amount of time to come to fruition. This is more for shorter term swing traders. And I also want to talk about the concept of moving equity. Okay, right, what we're going to do is we're going to go and look at some points. I'm going to go through them, and I would use these points to help me in my trading. I found them a great help over the years, so I hope you're going to find them useful. Let's go through them. All right, let's have a look at managing overall account equity. I've got four key points we're going to go through. Now, in terms of, as I was saying in the intro, you very often get traders, nice big profit. In the markets, it's like a windfall profit. Then they end up giving it all back, sometimes more, coming out with a very reduced profit. Now, in terms of this, I think that you should have a cut-off point on your overall account, okay, when it goes up by a certain percentage, and I'll go through the percentage in a moment. Once you've reached that point on your open trades, the percentage, you go flat. Now, what is the logic of that? Surely you're supposed to run your profits. Well, you should run your profits, obviously. You need to have a meaningful profit to do this. But it basically help you in terms of, if you take the profit in, okay, you will avoid what I would call a dopamine and testosterone hit, okay. Now, I've done fuller videos on this, okay, and I'm going to put the two videos beneath this one for anyone who wants to know more. But in terms of dopamine, it's obviously the pleasure hormone. It makes people happy, obviously, when they're making money. Testosterone obviously comes into play. It's very underrated in Forex trading that, it's not about just greed, okay, when people are making money. Testosterone comes in and reinforces that greed, which is, scientifically been proven. That's why traders get overconfident, because testosterone levels are up. I'm not going to explain exactly how testosterone works in this video, but there's a fuller video underneath. But I'm sure traders have experienced this. You make profits, you suddenly feel very invigorated, you feel confident, you want to make more. It's not just greed. You've got a mind-body feedback loop. So when testosterone levels are high, you can basically take too much risk. And that's what most traders do, or they're not mindful of trades reversing against them. So basically you go flat, okay, because that basically will avoid that hit, okay. And when you restart, you're restarting fresh positions, so you're very mindful of risk, more mindful of risk than perhaps you are when you've got a big open profit. Now, how much percentage profit should you take? Now, in terms of the percentage, it will obviously depend on different factors for different individuals. I'm just going to give you a ballpark example, okay? If I'm trading the markets, I will generally risk a fixed percentage of my account in the market, which I'll know in advance, okay? I'll know how much I'm going to lose if everything goes wrong. That can be between 5% up to a maximum of 10%, okay? Now, against that risk in the market, I've always found that taking plus 10% is the right thing to do, okay? It's a very healthy profit, okay? And very often you find in Forex trading, you're not really making much, and then suddenly all your positions go right. You're suddenly up 10, 15% or whatever. That's very good. Just take it in and restart. If more traders did that, they would avoid the overconfidence, okay? Basically, once they go flat, you can restart positions again, but you're coming basically back in the market. You're coming with a different mindset because you haven't got open profit. It makes you much more focused on the risk. I just find that tactic, highly effective. And yeah, sure, things can run on to the upside, okay? But, it's a bit like Mark Douglas says, you've got to decide when enough is enough. And you can only be wrong. The market is always going to be right. So you've got to set a level you're going to be happy with. You're happy with what you've got. A lot of people worry about missing out in Forex trading, okay? Which just, is irrelevant, okay? If you've got what you wanted, you're happy, that's it. You're flat, you're starting again, and you're starting with a much more focused mind. Now, in terms of point number 2, when you're losing equity, a lot of traders get what I would call a concern level, where you should have a concern level. And then there is what I call a critical level, where your account should not be allowed to go beneath, okay? Now, in terms of a concern level, I think any trader, if you fall 20% from peak equity, okay, then you should be concerned. Okay, you don't want to be 30% behind. I call that, the first critical level. Okay, 30% going to make 50% to get back to break even. When you're kind of on life support, you're at 50%, because you've got to get 100% to get back to break even. So if you fall towards the 20% level, what do you do? Well, basically, don't try and get it back too quickly. And this is another problem for traders. They fall behind, and rather than decrease trade size, they increase it. Why? They have testosterone overshoot. This particularly happens if they've given back a lot of open profit. They want to fight the market. Testosterone levels are too high. Okay, then what you get is cortisol. Okay, that comes when you're starting to lose and you're starting to get stressed out. Cortisol causes stress. Okay, what cortisol does in your body, again, there's a fuller video on this, it basically elevates stress levels for too long. Okay, and as humans, we're not designed to have stress levels high for too long. Cortisol is a response, basically, in our evolution for danger. Okay, and danger in evolution is normally, pretty quickly over and done with. Like a saber-toothed tiger attacking you or something like that. But today, what we do basically keeps cortisol levels too high. And what happens when they do? Obviously, you've got stress. But what it will do is basically make you more nervous. You are basically normally under the pressure of you're not confident, can't pull the trigger. You see things that aren't really there, and experienced traders, if ever they've been in the big loss, will associate with all of this. It's very difficult to trade properly when basically those levels are too high. Now, actually, I've done point B already on determining cut-off levels. At 20%, you should basically cut whatever exposure you've got right down. I would normally, let's say, go from 5% to 2%, okay? If I get up towards 30%, I might drop it down even more, okay? I want to get my confidence back. I'm not interested in getting back too quickly. And sometimes, if you're just losing and your confidence is going, just best off to have a break. Take a week off, just go away from the markets and come back, like recharge your batteries. And this, problem happens to even experienced traders. I saw Vic Spirandio, one of the great traders of all time, in Trader Vic, making the point that you just want to get away from the markets. Just do anything, take your mind off the markets, basically build your confidence and then come back. You should have breaks from trading anyway, in my view. Certainly if you're trading what I would call serious money, it's very stressful. And when you're losing, it is a time when you've got to be very aware of your mindset, the effect of cortisol and the drop in confidence, okay? Now, in terms of point number 3, time your trades. Paul Tudor Jones, again, one of the great traders in Market Wizards, outlined a point or a tip he got from an old cotton trader called, I think his name was Stan Cullis, I can't remember. His name certainly was Cullis. And he was saying, if you're trading, okay, only give your trades a certain time to work in your account. Now, Tudor Jones is mostly an aggressive swing trader, so this would not apply to trend followers. But let's say you're expecting a big breakout. The breakout comes, but it doesn't follow through. Only give it a certain period of time to follow through. I think Tudor Jones would give it just a few days. If after those few days it hadn't done what he wanted, he just shut down the trade and went flat. And I've tended to find that if I'm swing trading aggressively, my move should come pretty quick, okay, and follow through. If it doesn't follow through, more often than not, it comes back on me. So you're best to get out in the market and wait for another opportunity, okay? Now, in terms of point number 4, cut and run. This is actually something I picked up from someone a little while ago who I was chatting to. A really successful trader. He called it cut and run trading. And I've been trying it in my sort of swing trading account, and I find it really effective. And basically his concept is you focus on the market as you trade, not individual pairs, okay? Now, what do you mean by that? Well, basically, he would run a limited number of pairs, okay? Normally, I think 4 or 5, okay? And then what he would do is if he saw a trade that was better than the trades that he had on, even if he believes in the trade that he's got on, he'll take that trade out and immediately switch to the one which he considers has the better profit potential. And very often do this with trades that, let's say, with a bit of a loss, he still thinks they're going to turn around, but he sees the better opportunity elsewhere. He's gone for that one. And I think a lot of traders actually could learn from this because, you aren't trading individual trade, or you are trading individual trades, but the market is really your trade, isn't it? You want the best opportunity in the market overall. A lot of traders, what they'll do is they'll have a trade on. It'll be a bit of a loss, it's hanging around. Then they'll see a trade, they'll think, oh, that looks good, but I haven't got enough equity to commit to it because I'm already stuck in this trade. The concept of cut and run is you're not stuck in that trade at all. If it's a small loss, it doesn't matter. Or even a reasonable loss, if there's a better trade elsewhere, go over to the better trade. Yeah, at the end of the day, a lot of traders anchor, okay, their entry price. So they hate coming out, at a loss. Yeah, it's a frequent problem, especially with beginners. You often hear traders say, they don't really believe in the trade they're in still, but they say, well, you know what, when it gets back to break even, I'll get out. There's no logic in that at all, is there? If it's not running your way, you think it's going to have a bigger loss, why are you hanging around? You're just anchoring to the entry price. The idea of cut and run trade, I just thought it was really good, actually, because you're just always focused on the best opportunities in the market. Your account equity is your account equity. A losing trade may not come back and win. I just thought it was really good, actually. It's simple, but I hadn't thought of it until the guy told me a few years ago. So I like to practice that. But I think, in terms of managing your overall account equity, obviously you're going to manage your trades individually as well. But when you get big windfall profits, get them in the bank. When you're losing equity, do not try and come back too quickly, and be very aware of your mindset. Your mindset when you're losing can be a real problem, obviously, because the hormones that come into play, it's not just fear, okay? When you're winning, obviously, the hormones are coming into play. It's not just greed. And, hormones impacting upon you in the Forex markets. It's underrated. I've got 2 videos beneath this one that explain all this in a little bit more detail. Also, fantastic books you can go and read, which are obviously Mark Douglas' Disciplined Trader, which I think is a fantastic book. But also, another great book is The Dog and the Wolf, okay, which you can see on one of our playlists as one of our recommended books. A book that's also very good, not just for Forex traders, but for anyone interested in stress reduction, managing stress and having a clear mind. Go get the book Zebras Don't Get Ulcers, which is fantastic, actually. These points, they're simple. Anyone can follow them, and I believe that they can help you manage risk against enhancing your reward. Okay. And also, they can help make Forex trading a lot less stressful, okay? And I think, in terms of Forex trading, dealing with money, with uncertainty, okay? There's no certainty. It's stressful, especially if you're trading, meaningful amounts, okay? Right, that is the video for today. I hope you enjoyed it. Thank you very much for watching me as usual. Take care and have a good day.